Welcome back to our weekly newsletter on the economy, where we bring you the latest updates on business and economic trends. Today, I will take you on a journey through this week's newsletter. To receive our weekly newsletter and stay informed on the latest economic developments, simply follow our website in the description below. Let's get started. Starting with world trade, the CPB, Netherlands Bureau for Economic Policy Analysis, reports a 1.4% decrease in world trade volume in November 2023 compared to the previous month. Notably, imports of China experienced a significant drop of 7.8% following a 4.5% increase last month. And shifting gears to technology, the European Commission has established an artificial intelligence office. This plays a pivotal role in enforcing the AI Act, the EU's groundbreaking regulation for AI. The AI Act, set to be formally adopted soon, aims to shape the future of AI in Europe. Moving to financial markets, China's securities regulator has taken measures to stabilize stock markets by fully suspending lending restricted shares. This decision is aimed at reducing market pressure during downturns and comes amidst recent market volatility. And now let's focus on Turkey's manufacturing industry. In January, the capacity utilization rate for manufacturing dropped to 76.4%, reflecting a 0.9-point decline. Environmental news now. The European Environmental Agency reports that industrial pollution costs about 2% of the EU's GDP annually. However, there is a silver lining. Advancements in technology and renewable energy have led to a 33% decline in these costs since 2012. And shifting gears to the transportation sector, we have exciting trends in EU commercial vehicles. In 2023, new registrations saw significant growth. Vans surged by 14.6%, trucks by 16.3%, and buses jumped by an impressive 19.4%. And electric vehicles also made their mark, especially in vans and trucks. And taking a closer look at inflation, Sweden's consumer price index eased to 4.4% in December 2023 and marking a decline from November's 5.8%. This signals some stabilization in the inflationary trends. Now, Montenegro's industrial sector is showing robust growth. The sector experienced a remarkable 7.4% increase in the fourth quarter, and compared to the same period in 2023. The Red Sea crisis is sending shock waves through the global economy. Our projections indicate a potential 0.9% impact on the European economy. Global GDP growth is slowing by minus 0.4%, and inflation is on the rise by plus 0.5%. The Suez Canal disruptions are shaking up shipping and energy prices, casting a shadow on the recovery of the European and American economies. And shifting gears again, we have concerning news from Great Britain. Business insolvencies are surging. In the third quarter of 2023, the retail sector is taking a hit, witnessing 546 insolvencies during the same period. The trend has been upward since 2020, with 2023 projections exceeding 2,300 insolvencies. As interest rates climb, 2024 might bring even more challenges. Next up, surveys aligning with EU-mandated ESG standards. Effective February 1, companies must report non-financial data, emphasizing social responsibility, corporate governance, and environmental protection. So this impacts diverse industries, with the metal processing sector facing significant challenges. Fines for emissions will roll out in 2026, making adherence crucial for market entry. Now let's turn our attention to Japan. The OECD Economic Survey suggests rebuilding fiscal space, addressing population aging, and reinvigorating productivity growth. And despite challenges from weak global trade, Japan's GDP is projected to grow by 1.9% in 2023, with a focus on domestic demand, driving growth in 2024 and 25. And zooming in on Hungary, the unemployment rate stood at 4.2% in December, with an annual average of 4.1% for the entire year. Let's delve into the agricultural sector. Eurostat reveals intriguing data on EU agricultural land prices. Arable land prices vary significantly across countries, with Croatia having the lowest average and Malta the highest. The regional disparities are evident, painting a diverse picture across Europe. World Trade Organization underscores the pivotal role of digital trade in boosting growth for developing economies. Digitally delivered services are soaring, constituting 54% of total services exports in 2022, and bridging the digital divide is essential, and governments play a crucial role in creating a conducive regulatory environment. In January, we saw a slight uptick with the Consumer Confidence Index in the Netherlands edging up to minus 28. It's always fascinating to gauge the sentiments of consumers and understand the factors influencing their outlook on the economy. Now, shifting our focus to Finland, a country where business confidence has shown resilience. Over the past 8 months, the manufacturing sector witnessed a notable development. In January, the confidence balance figures stood at minus 13, marking a positive shift of 6 points compared to the previous month. Although still below the long-term average, this indicates a noteworthy change in the manufacturing landscape. Next up, we have a report from the International Energy Agency that brings some exciting news in the realm of clean energy. According to the IEA, clean energy resources are poised to meet the surge in global electricity demand over the next 3 years. Renewables and nuclear power are expected to reach unprecedented highs, covering nearly half of global electricity generation by 2026. And this signals a significant shift toward low-emission sources, aligning with the global efforts for a sustainable energy future. Shifting gears to economic stability, the Eurozone has some positive news. In the fourth quarter of 2023, the seasonally adjusted GDP remained stable, showing a modest increase of 0.1% and 0.2% in the Euro area and the EU, respectively. After a slight dip in the previous quarter, the stability is a welcome sign for the economic landscape. Now, a closer look at the UK manufacturing sector. January brought challenges as the sector continued its downturn. The S&P Global UK Manufacturing Purchasing Managers Index, the PMI, posted 47, indicating a contraction in operating conditions for the 18th consecutive month. Supply chain disruptions due to the Red Sea crisis played a significant role, of course, contributing to declining output, new orders, and employment. Despite these hurdles, manufacturers express optimism, citing new product launches and expectations of economic recovery. Turning our attention to Singapore, where manufacturing activity showed resilience. In January 2023, the Singapore manufacturing PMI increased marginally from 50.5 in December to 50.7, marking the first period of improvement. It's always promising to witness positive momentum in key economic indicators. Let's round off with a glance at Turkey's foreign trade statistics. In December, exports reached $23 billion, showing a 0.4 growth, while imports decreased, reflecting an 11% decline. Trade dynamics continue to play a crucial role in shaping Turkey's economic landscape. Now let's explore an exciting collaboration fostering green energy. Chinese companies Shanghai Fengling Renewables and Serbia Zinc Copper have inked a groundbreaking deal investing €2 billion in wind, solar, and hydrogen projects in Serbia. The Memorandum of Understanding outlines plans for wind farms, solar power plants boasting a total capacity of 2,000 megawatts and a cutting-edge green hydrogen facility. This initiative not only aims to supply green electricity to Serbia zinc copper, but also contributes significantly to Serbia's economic development. Of course, construction is scheduled to commence in the first quarter of 2025, with completion anticipated by 2028. And this marks a major leap forward for Serbia's renewable energy sector. Shifting our focus to the United States, a flash PMI signals a steep fall in inflation at the start of 2024, according to S&P. Preliminary PMI data for January points to a significant decline in inflation pressures within the U.S. economy. This is attributed to a slowdown in elevated price growth in the services sector. Interestingly, this contrasts with more persistent inflation signals from PMIs in Europe. The latest data suggests U.S. inflation falling below the Federal Reserve's 2% target, indicating a potential policy divergence with Europe. The U.S. PMI prices charged index showcases the slowest rate of price increase since May 2020. While manufacturing prices have seen a slight increase, the overall trend signals a potential cooling of inflation in the U.S. And moving to North Macedonia, where industrial producer prices held steady in December. However, the energy sector witnessed a notable 12.1% year-on-year decline. And these dynamics provide insights into the economic landscape, reflecting stability in certain sectors and challenges in others. And finally, some positive news from France. Industrial output growth in the country hit a 7-month high in December, with a 1.1% month-over-month increase, exceeding market expectations. And this surge in industrial production showcases resilience and positive momentum in the French industrial sector. It's always encouraging to witness such robust growth contributing to the economic landscape. That wraps up our economy newsletter for today. We covered a wide range of topics. Stay informed and tuned in for more economic news in our upcoming episodes. Thank you for watching and remember to subscribe to our channel for the latest updates.